Hey guys, today's webinar is about giving you guys a run through of Quantsapp. So this was a much requested webinar, and the reason is that a lot of people who download Quantsapp take some time to get the hang of it. So today's webinar is being conducted by Miss Tina Gadodia. She is the Vice President at Quantsapp. She has an MMS in finance and has 13 years of professional experience in futures and options research. She is an expert in generating option-based trading strategies, both on the directional as well as the non-directional front. And prior to Quantsapp, she has worked with Motilal Oswal and HSBC Invest Direct as a senior derivative strategist, providing single leg and multi leg option strategies and handling the delta trading portfolio for ultra HNI clients. So, if ma'am is set up, so we can go ahead with the webinar and I can transfer the controls over to ma'am.
Thanks, Madhura. So we are good to go.
Okay.
Hi, friends. So a warm welcome to one and all. So we are meeting after a long time, but this time we have something very interesting to show up. So hope you guys enjoy it, and let's begin it. So the markets have been choppy, which we all know it. Like by now, we have seen how the market range has been increasing. We are seeing that post that big downfall, the market is nearly like 1,000-1,500 points range. So in this market, what most important for any trader is to always keep a tab of how the data is panning out. So data analysis is something which we need to be doing it constantly. Okay. So in Quantsapp, our main focus is to bring up with the new analytics or something analytics which is very user friendly and which helps the user in their day-to-day trading. So I will just, before we start, I'll request everyone to switch off their video because that will give us a better bandwidth also, and it will be better for all the participants. So a humble request that everyone keep their video off and we can be good to go. So now if we look at how the entire day Quantsapp thing is, so we can divide the tools among the four main broad categories. Okay, so I namely suggest like what are the tools which we use for the trade identification. Second would be for the trade strategizing. Third would be the trade management, and fourth would be the information analyzing. So if I bundle all the products which we are available, so for the trade identification, the most important thing we need to look up is how the built-ups are positioning. So be the built-ups be of the individual scripts or be it a sector built-up. So understanding how actually the participants are trading, are they taking the positions at home or is it just an intraday? Because the focus when we take any trade is to look at how much is the serious amount of money or serious amount of participation which are coming in the market. So I put a lot of stress on built up. Then comes second is the open interest. So it's basically an option open interest stuff. So knowing how the band in the options are playing out. So this is very, very important. Third is the synopsis. So synopsis, I would rather say it's more a intraday thing. So person who wants to buy in the morning and close off by the day end, it's like you look at the synopsis at regular interval because that will tell you which particular strike is seeing the activity. So straightforward in the market, scanning the entire market, the strikes which are showing the highest amount of activity, the highest amount of open interest changes are being shown up in synopsis. So it's very simple to scan up. Then comes the triggers. So triggers is an extension of the open interest. So once you know the open interest concept, then the triggers plays out. So basically, we know in the market, the smart money usually are the writers because they like to earn premium and reduce the cost of holding. So this is the place where the writers normally see themselves in a fix. So triggers is a product which helps us to find out which could be the potential levels for any stock. I'll say that we'll take the question and answers towards the end. There are many topics which we'll be covering, and we'll have an adequate time for Q&A. So jot down all your questions. We'll definitely take it up towards the end. Then the trap indicator. So this is a newly introduced product. So I will go deeper into that, like how exactly we can use this as our trading tool. So for identifying the trades, this is one of the proprietary indicator. Then come the chain. So everybody know option chain is basically a snapshot data of the entire market for all the strikes thing. So we'll see how to do a thing. And we have an extension to it, what is called as chain what if. So this is basically comes very, very handy when you are a intraday trader, when you want to take your position for 1 or 2 days. We know that as the markets are choppy, we cannot sit with our option as we wanted. So markets are dynamic, so we need to also position our trade very fast. So be it getting into the trade or coming out of the trade. It's very, very important for us to manage our trade very effectively. And this is the reason why we came up with this product called as Chain What If. Then IV, it's a bouquet of the entire implied volatility suit. So this is also important part of it. So today our main focus is on these 4 points. The first is like the finding, building, and managing the option strategy. Second is the gauging and impact of variables like IV, underlying, and days to expiry. Third is understanding the build-ups of stocks and sector. And the fourth is trap indicator. So we'll start with this thing. If the time permits, and if you guys have some more questions, I'm ready to take any questions, anything on the application. So the focus would be on the trade identification. So let's begin. So from the identification perspective, if you look at what are the things we should be first looking at. So the build-ups is the one which we always think of. So now if I go through, so we have also to share a good news that we have launched the application on the web also. So we have web.quantsapp.com as the URL for doing the web app thing, for using the web application. Presently, we are in the beta phase. That means we are daily basis, we are upgrading this application. We are making changes into it. So there might be few bugs part of it, which would be getting fixed as and when we notice it. And the release would be coming very, very fast. So we have nearly added around 10 plus products into it. Few are still left. So as the products are developed, it will be updated and the application will soon turn from beta to live. But it's an open one, so everyone can use it. So it does have the free and pro access part of it, which is similar to your mobile application. So a pro user, you can use web as well as the application. You have the access to both of them. And for the free, all the tools which are free are available to see. So now let's see on the built up part. So first and the most important thing comes up is the build up, the security wise. How are the securities positioning their trade? So whether the traders are taking the long trade, short trade, whether we are seeing basically a unwinding or a covering. So if you look at the Nifty, on yesterday's session, we saw Nifty was up marginally 0.35%, which where the price is 9236, and the open interest increase was 0.73. So it was a marginal long which we saw in the yesterday's session. Whereas on the bank Nifty front, it was a short which was getting built up. So the price came down by 1%, while the open interest was increased by 6.5%. So this show that there was a short built up. So basically, the very starting point of the derivative is to understand how the build-ups are happening in the underlying. So when you're taking an option trade, ignoring the future doesn't make sense. So everything in derivative is co-integrated, they are related to each other. And so whenever you're taking a trade, always keep the broader picture in perspective. So it's very, very important to know how the build-ups are spanning out. So you get the index-wise build-ups, and you also get the individual stock-wise build-up. Okay, so we saw that yesterday the highest build-up was seen in SBI Life, followed by the Z and Hindustan Unilever. You can sort it by price change, or you can sort it by open interest. So each and every tab you can sort it out. So if you want to see where the highest OI increase is there, you can do by the OI. If you want to see where the price wise momentum was there and there was a OI, do by the price, see how the OI and price were there. So focus should never be just like I have heard someone that today I will go and buy a call option. I've heard someone that today the market is falling up, so let me sell anything. Market might be, if you know, you are seeing very much stock specific activity. So it's not like if the Nifty is up means all the 50 stocks of Nifty would be up. Similarly, if the bank Nifty is down, it doesn't mean that all the banking stocks are down. So whenever you are taking a trade, doing an top down approach gives a better reward to risk. Understand how the trades are happening in the sector, then boil down to like which are the trades which are showing strength in that particular sector. So automatically you are always with the winners. So your probability of winning also increases. Okay. So this was the one of the oldest product built ups, but believe me, ignoring this will never ever give us a edge. So keeping the built up is very important. Second most important point to look at is what is the market status, like how the market is divided, whether the market is more towards the long or more towards the short. So when I say more towards the long, that means like out of like 156, 157 stock, how many are on the long side and how many are on the short side. If we see something like this, which is like a nearly equal distribution, that shows that market is range bound. We don't see a gungo rally coming up, neither there is a shorts which are being created heavily. So having a look on this market structure during the day also is very, very important. To take if you have taken 5 positions long, and if you see that the market by 3 o'clock is like majorly is on the short side, or you see basically it was more a short covering, then it is not the serious trade which has been taking place. So we need to do our trade management keeping this also in perspective. And if in the morning, maybe like by 9:45, you see that almost 70% of the trades are on the long side, that means the strength is on the long side. Then taking a short trade will not give us that much money for the day compared to the earlier one. So always keep the market structure in perspective while taking any trade. So this was on the built up, the first instrument wise we have. Then we do have the cycle. So cycle is a pro feature. So basically, as we have been trading throughout day in and day out, so I can talk from the derivative research analyst person who have been trading the market. So one thing which comes up is like a visuals are more attractive than the numbers. So if something comes up in a colorful format, it stays in our mind forever, right? So the cycle, the thought process for us for the cycle was the same thing. The habit which we had it, we wanted to show up. So cycle is basically showing you like day on day basis how the build-ups are taking place in any instrument. So when I say any instrument, you have all the symbols out on the left hand side. You have the days which are on the upper side. So you see that it's 8th May, 7th May, 6th May, so and so forth. Okay. Green stands for long, blue stands for long unwinding, red stands for short, and yellow stands for short covering. Okay. So at one glance, maybe if I have to scan the entire market, I need to find out, say for today, which are the stocks which are seeing the longs. Okay. So I just see wherever the green are there. Ashok Leyland was there, Bata was there, Biocon was there, Cadila was there, Colgate was there. Then we had Grasim. Then we had ICICI Bank, ICICI Thru. Okay. So basically we see that how the colors are showing us what the trades is. Okay. Now you see whether you are continuously seeing how you are seeing, whether you are seeing more of green, more of red, more of yellow, or more of blue. So if I want to do, what is the beauty of this product is like you can scan out from the past dates. So if I say in the past 60 days, I'm looking out for the reading of longs where there is more than say 40 trades. Okay. So basically you see SBI Life was a new introduction, so I will ignore that part, but not much we are seeing it. Okay. So if I say again, the last 60 period, if I want to see the stocks which are on the short side with a count of more than 40, none is there. Maybe I will just reduce my look back period. I say that in the last 30 days. So these are the trading days and these are not the calendar days. So the last 30 days, if I want to see where there is 15 on the short side and I apply, I can see the top 5 stocks where the shorts are getting accumulated. So those are like Tata Motors, then we have IndusInd Bank, BPCL. So we know that where the internal shorts are getting created. Okay. So this was on the cycle side. Now I will show you from the sector side also. So for that, I will share it from my mobile application. Okay. So I hope everyone can see my mobile application. So now, if I go to built up, in mobile, we have given 2 main tabs. One is the script and the sector. The script, you have okay, you get the symbol, you get the cycle, and you get the future OIH. So which are the similar. So we have just repositioned it because we have got the sector also now. So it has got repositioned it. So if you look here, we have the same similar data. Okay, future OIH. So now we'll go to the sector. Okay, so basic crux of the sector analysis is to do the top-down approach. Now we are scanning and reading how the sector is performing, and then we can pick up the stocks within the sector to know which are the trades on the long side or on the short side. So for any given day, we get the built up scenario of all the sectors. So there are the sectors where these sectors have been defined based on the composition which are there in the derivative. So it is not the sectors specified by the, the broader index one. So as it is not the cash based index, it is a derivative based index. So all those stocks in that particular sector which are listed in the derivative segment forms the composition of that particular sector. Okay, so I'm making it clear. So it is basically the derivative composition of that sector forms the entire index, and not necessarily we have the general sector composition definition which we have in the indices. Okay, so if you look at in cement, there would be like we have ACC, Ambuja cement, so those are there. Rest we don't have it. Then we have FMCG, whatever the composition of the FMCG one would be there. Then we have the Nifty stocks. So if we look at here, the definition is Nifty stocks and not the Nifty. That means this particular change is the entire gist of all the participating Nifty stocks, and it is not of the Nifty index per se. So all the 50 stocks, how the build-ups are taking place in that Nifty 50 stocks, that summarizes this thing in the Nifty index thing. So at times you might see that the Nifty, there is a long, but the Nifty short stocks is showing the long unwinding. Quite possible because the derivative Nifty index is an instrument which has its own built-up structure, while the Nifty stocks is the index made of that 50 stocks of Nifty composition, taking the individual build-ups and summarizing that. Okay, similarly we have it for the bank Nifty stocks also. So now if I look at on the sector perspective, on the OI front, so OI highest was created in the media. Basically Z was up on yesterday's session, we saw Z being going higher. Then we had the FMCG one. Again, it was because of the lever. Okay, so you see that there was a long, which was the L stands for the long, S stands for the short, LU for the long unwinding, and SC for the short covering. So the media FMCG were on the long side, pharma was on the long side. Then we saw shorts getting aggressively created in the PSU banks, auto, banking stocks. So the bank Nifty stocks means all the bank Nifty composition stocks are being shown here. Then Nifty saw minor long addition. Okay. Then majorly were on the unwinding or the covering side. So there was a OI shading which we have seen in metals, power, cement, auto ancillary, oil. Okay. So the fresh position was created in media, FMCG, pharma on the long side, while on the short side it was auto, PSU bank and banking stocks. Similarly, now we can have the cycle of the sector. Similar to what we saw on the script wise, we have it for the sector wise also. Now if you look at, you have all those sectors on the left hand side. You have the build-ups summary shown here. We have given a option of show dates. So that means if you want to see larger picture, if you get used to it, so I would say that daily basis have a look of this particular grid, because it will start, you will start remembering it. So you can see at the larger picture at one go. And if you want to know the date wise, you can just do the show dates and it will come up. So if I look at here, auto for the last 2 consecutive days, we have been seeing the shorts. So we should not go and be like a contra trader. Let me take a long trade. Because if the entire sector is showing the pressure, and if we try to play a contra, that means that stock needs to have an immense potential, one thing. Or second, there needs to be something which is different from the rest of the stocks in that sector. If neither of the two things are there, then we should avoid it only. So rather than going with the trend is always the best thing. So the top-down approach plays well. Scan the sector which are showing the long built-up, short built-up, and then you can go to the script and scan the scripts in that sector which are showing that built-ups. Clear? So now you have, basically, if I will just roughly go through it. So fertilizers were unwinding. Then media if you see, basically we are not seeing a major short also. So yesterday we had a long built up. If you look at PSU bank last 2 days it was a short one. Then pharma, it's basically alternates. So pharma is also mixed. So it's not completely into the long territory, neither into a short one. So it's a mixed one. So at this one go, you'll get the complete structure. Now, if I have to look at the historical data, so if I click on any of this one, see, I click on PSU banks, you will see the price and OI structure of it. Okay, just a second, give me a minute. Okay, so now if you look at one thing, what comes up in our mind is over from March till date, the open interest in that sector has reduced. So if you look at in March, 9th March, we had OI which was nearly like a 12 CR, and today we have a OI which is around 7.6 CR. Okay, so that means definitely in this downfall, in this gyration, people are hesitate to take a position. Given the condition which we are into, definitely these things should come up. So it's not something like out of the blue. We know what is the market going through, how the things are spreading out in the economy. So one thing is very true, the participation has decreased considerably. Okay, now if I look at here, this price and this open interest is of the entire composition of the PSU band. So the price, it's like a weighted average price of that entire composition of the stocks. Open interest is the cumulative open interest. Okay, so don't think like a PSU bank as an index is not listed in the derivative. How can Quantsapp show that PSU bank as an index? So let me clarify it. It is not the index given by the exchange. It is the index which we have created out of the composition of the stocks of that sector which are there in the derivative market, to give us the perspective to know how the sector is panning out individually. Okay, so now if I look at the graph very clearly throughout the app, red means short, green means long, blue means long unwinding, yellow means short covering. So if you look at the graph, so we saw the last 2 days the shorts have been created. Earlier to that, it was basically long unwinding, but the long unwinding saw a good amount of fall in the prices. Okay, that means a serious amount of long unwinding was there. It wasn't a small one. So that becomes very important. Has the unwinding or covering impacted the price significantly? And how much has the OI reduced? So this give you at one go how the structure is being presented by the market. So what we are doing is we are taking the information given by the market, evaluating it in a visual basis and coming up with the information. So now you have OI change, which is basically the absolute basis, the change what we are seeing it. So you have change in OI and you have the price. So it's the actual, what is the difference we are seeing from the yesterday till date, what is the difference you are seeing. So if you see yesterday, we saw the change in OI of 45 lakh 9,379. Okay, while the price was 4589. Before that, if you see, the OI change was 8,09,570. So yesterday, a serious amount of shorts were there in the market. We'll just finish this built up part and then we can take a question on built up. So just give me 2 more minutes when I can summarize the built up. Okay. Now, if look at the unwinding was there in between. So this was basically yellow, which we are seeing major one was the expiry. So definitely the position got squared off, and the next month was on the lower base. So overall, this is the structure. Now, if I go and look at any other sector, pharma. This is what the pharma is presenting right now. So last 3 days, we are seeing nearly like an equivalent OI change. So yesterday was on the positive side, long side. Day before was on the short side. But if you look at the price is on the consolidation front. So we are not seeing much of the damage also. And now it's very important that price breaches this point so that any further thrust comes up. If you look at the absolute OI one, so this is how the pharma entire OI structure is. So we saw a considerable fall in the OI, absolute OI since the March to the May. And now, prices, as we are seeing right now, the OI is on the rising one. So if this continues, if the structure continues, like we see more of the greens coming up, then definitely the sector could be poised for a upward move. Okay. Now, if I say oil is basically, if you look at the Reliance is the major one, which takes up the entire chart. Okay. So if you look here, basically oil has more of greens and less of red. Okay. So yesterday we saw the short covering. So neither, it's like a no trade as of now. So this way you can do the sector. So span out. Maybe by 9:30, you let it to settle out and then see the sectors which are participating, where we are seeing the OI increase. Go on to the cycle and see whether that particular sector has more of greens or more of red. Then you'll come to know. Maybe like in a sector, you don't need to look at the last 20 days, 20 period. You can look at the, say, last 1 week. It entirely depends upon what is your trading style. Are you an intraday trader? Are you a 2 to 3 days trader? Are you a strategy person who looks up for 15 to 20 days? Then your period should change. For an intraday trader, last 5 period is enough. Maybe for a person who is a strategy person, who's taking a longer view, maybe for them it's very important to know the underlying trend very clearly. So this way you can do the same features which we have in the script wise cycle, the same is there in the sector wise. You can change the look back period. If I 20 period, show the sector which are on the long side for 10. Apply. Oil is the only sector where in the last 20 period, 10 times it is on the long side. Show it on the short side. Apply. No, nothing is there. Maybe if we say long unwinding, nothing is there. Let's do all. So, or maybe if I say in the last 20 period, long and long unwinding. So basically, wherever we see green and blue combined more than 10, these are the sectors. So IT, media, recent history becomes very, very important. So not to look at like a 20 days, what was there, combining it with the today is very important. So if I look at it, recent basis where the green and blue is highlighted. Similarly, for the short covering, that means where we are seeing more of red and yellow compared to green and blue, these are the sectors. So auto comes into the focus area. Then you have FMCG saw the short in the last 4 days. Yesterday we did not see much of the short, but if you look at it was more having reds. So that means we need to be careful while playing the pullback. If you are seeing any pullback, we need to be careful in playing it. Okay. So this is the sector. Now I can take a couple of questions on the sector. Just give me a second. Okay. For intraday player, does the OI data comes real time? Yes. In the application, we have 5 minutes data, 5 minutes snapshot data. So every 5 minutes, entire application, all the tools gets updated. And but you need to be careful, like from 3 to 3:30, what will happen? Like you might see there is a long short thing, but there are certain trades which exchange reports after the 3:30 time. So which is neither in your hand or our hand. So at times you might see that during the day, Bank Nifty was showing a huge open interest of 20%. But in the Bhav copy, when it comes up, it comes down just to 3 to 4%. It's very much possible because markets are volatile. Many executions happen in the last 15 minutes. Exchange doesn't report that thing on the real time basis. There are few trades, custodian trades like which doesn't come up during the day, that gets reported post the market day. So which gets summarized in the open interest, in the Bhav copy. So whatever exchange gives us, that's presented in the application. How to find the stock composition of shown sector indices created by Quantsapp? Yes, can. So if I go to script, okay, when you look at cycle, now select auto, all the auto stocks are there. If I go to Bank Nifty stocks, the banking stocks are there. If I go to IT, the IT stocks are there. Okay, so the compositions of the stocks are there. Please show once again the cumulative OI part since last 250 days. Tanu, tell me whether you want it for the script or the sector. Okay. I won't go by the stock specific, but just taking one case. So if I future OI, if I do say Tata Motors, this is the Tata Motors OI one. Okay, first time volume has dropped down to half. Okay, the pro user can look at the historical data since inception. So I'm looking on from the 2014, or you have 2008 data also. So you can have as many look back. So you can do in fact detailed analysis like in 2008 fall, how was the open interest for particular stock, and today when the market is in this scenario, what is the type of open interest which we are seeing it, be it for the Nifty, be it for the Bank Nifty, be it for the individual stock. Okay, so this way you can have the historical one. So the last 2 days we are seeing the short in this stock. There before it was more of green and blue. Okay, so now this is what we get it from the futures data. Okay, now we can now move on to the second step of looking from the options, that is the option open interest. Okay, so now if I say I got the future, just the second part is to look at the option open interest. Okay, so now when I say I have picked up one thing, the top down approach, I picked up the stock sector, I have seen scanned the stocks. Now I need to get the confirmation from the option market. As I told you earlier also, we are not in an isolated market. If you are a future trader, looking at the option data is very, very important. Never ignore what the option data is saying, because in options, we see that's a huge volume. There is a complete shift in trading, which I've seen. So like a trade, if you see mostly 85% to 90% of the volumes are in options. So we cannot afford to ignore the option data. So now if you got the future, just look at the options thing. Where is the highest call? The highest call is at 100. Where is the highest put? We per se don't have a highest put, so it is more a distributed one. So this will give us like if it is showing a long, and if you're seeing that the prices are holding on near the support, then you can take a trade. But if the prices are, if you see that the change in OI, the puts are getting shredded, so we need to not go and take a long trade, because that shows that the put writers are now unwinding, which is a risky trade. But in this case, say for the put has seen an increase. The 80 put has seen the increase, the 70 put has seen the increase, while the call is nearly 90. So as of now, 80-90 is the range. If you want to play within this range, we can do it. So this will tell us like what should be our ideal target. We need to understand from the data, does what I'm thinking and what the market is saying are in the same page or no. We cannot ignore the market talk. We need to understand what the market data is speaking. If your idea and the market thought are in the same page, you can go and take a trade. Otherwise, avoid it. So if I look at Nifty, so you have for all the expiries data, by default, it is the nearest weekly one, so that will come up. Okay. Now, if you look at, first we'll look at the actual open interest. So you have in a Nifty basis, 9,000 put and 10,000 call. Sorry, 9,500 call as the immediate basis band. Okay. So this is the broader framework. So now, where are we the Nifty front? So we see that for this week, 9,000 to 9,500 is the broader range. Change in OI on Friday basis was more. We saw that in the money puts. So we put lot of stress on in the money activity. Why will a writer go and do a in the money activity unless the surety is more? Because you're taking a risk of selling something in the money. That means you believe that that in the money will become out of the money. I'm not going into the jargon of in the money, out of the money. I believe most of them knows it. So otherwise we have few basic videos also, we have lot and lot of OES videos also which are available in our application. You can brush through that, you can run through that, clear your fundamentals, and then you can take a trade. So we saw in the money puts of 93, 9300, 9400, 9500 being written. So some amount of strength is showing up by the data. Okay. Now, one important thing as a if you are a serious option trader, what you need to look at is the change in OI from the custom time. So there could be possibility that something has come up during the day, because of which the entire structure has changed. Normally, these are the time when you have the RBI policy coming up, where you had any, you can say any activity which came up, news came up during the day, and you see that how the things have changed during the day. Especially if you're an expiry trader, looking at the data on an intraday basis makes lots and lots of sense, because every hour is something showing a different story altogether. So you need to have that conviction shown by the data to stick to your trade. Okay. So if I do this thing, if I want to say, wait, I'll do for the monthly option because the weekly got active now. Okay, let's do 28th May. I want to see the change in OI maybe from say 4th May, and say we say it from 2:45 p.m. What is the data? So this is the data. The highest OI was in 10,000. Let's do it very close by. So let's do it yesterday, 8th May itself. Tell me like how much has the OI changed in last 1.5 hours. So if I say from 2 p.m. This was the thing. So yesterday Nifty from 2 p.m. to 3:30. So in the last like 1.5 hour, we saw the OI increase at 10,000. You know, understanding it's very important. Like why a writer is going and writing something really very far off, unless he is fearful from the nearby strikes, and that can be seen how the volatility in the markets are there. So it's not a calm market. We are seeing in Nifty itself 200 points momentum. So the writers are also playing safe. It is not the same market condition which was there 6 months back. The market condition has changed. So definitely the expectation of the traders have changed things. And we need to be very quick and we need to be alert about what is the current scenario. Okay. So if look at this case, the call writers are writing at 10,000. We saw the minor put addition happening at the 8,000. So this was the case part of it. You can do for the any other stocks also. So this you get it from the open interest. Just give me a second. So there was a query in terms of like stock options are not liquid. I would rather say that the things are changing. It's not the same one where we used to say that the stocks options are not much liquid. Gradually, definitely, the volumes are improving and many stocks we are seeing a good liquidity coming up. So don't ignore the fact there could be at current instance what we are basically seeing up is like there could be a high bid spread because of the volatility. The IVs for the many stocks have gone beyond 100 also, right? That means nearly we are expecting like 5 to 6% a move in a day. So given the high implied volatility, the buyer becomes reluctant. So people move on to a strategy framework. But definitely options, if you look at all the liquid options, we see a huge amount of volume. So if you take all stocks, we are seeing a good amount of volume. So options definitely are liquid. Now we'll take up to the so do the chain. Okay. Now when we go to the chain one, so if I look at the chain, so we have the basic chain seen in the application, web application. Okay. So we have already the web application having the option chain. So what does the chain tells you? It gives you the complete snapshot data at one go. It gives you the Greeks. It gives you IV. It gives you change in premium, change in open interest, volume, everything at one go. Okay. So now the yellow indicates at the money, the green indicates in the money, and the red indicates the out of the money. Okay. So this is the chain. Now you have a waterfall. What exactly this product does is, I took a trade in Nifty, say I want to go and buy Nifty 9300 call option, okay, which is of 14th May, expiry is 14th May. Now, when you buy an option, what are the things which impacts it? First, every day, every passing day is impacting us, right? So every passing day will impact us. Second, the IV change in that will impact us. Third, the underlying change itself will impact us. So when I always tell people is what is most important is to have your concepts of in the money, at the money, and out of the money crystal clear. When you took a trade, that trade was at the money, but it will always be at the money. It's not necessary. So it's very important that when you take a trade, you understand due to the underlying move, due to the volatility move, due to the days to expiry, your options characteristics will change. So this what if analysis, let us understand. I want to buy 9300 call option. Okay. Now, what will happen to my 9300 call option? First, if the underlying goes to say 9400, so I make it 9400. My 9300 call option will increase by 76 rupees. Okay, so can you see this 9300, 76.59? So that shows basically the increment in that. So your 9300 call will increase by 76.59. The premium can go to 197 rupees. Now, how the Greeks will change? Greeks will never remain constant. Your delta will move by 0.18 and it will become 0.62. So that means as you're going in the money, definitely your delta will also increase. Your theta has become negative 1 minus 1. So it has become minus 13.64. So as a buyer, you are about to lose more. Then your vega is minus 0.46, because now if you look at your intrinsic value is increasing and the extrinsic value is decreasing. So your vega is reducing because you're going more towards in the money. Okay, so this way your Greek's position will also help you to see how your change is happening. So your 9300 call, when the index goes to 9400, will behave positively. By 76 points will go up. So this is the case. It's only today. Now if say this happens today, it's counting Saturday also. Okay, Saturday, Sunday, Monday. So if I say this happens after 2 days, so it happens on Monday. So 9300 call is not 76 up, it is 46 up because of the time decay. Getting? So this Saturday, Sunday, taking up the premium and the benefit which we will be getting because of the underlying going higher gets offset, and net what you see is the 46 rise. So in an option thing, don't be like कि एक दिन बाद में trade आया तो चलेगा ना, एक दिन बाद में cut करेंगे तो चलेगा. It will never happen that way because every day has its own worth. Now the beauty lies over here. You can do the evaluation by days or by date. Days is clear. एक दिन आगे गया, it's okay. But say for instance, I am a expiry trader. Every minute counts to me, right? Because if you know how the theta behaves, how the time decay behaves, it is market is moving every minute or every second. So it's very important to know, like say for instance today being the expiry, how the things will change over the period. So I say date. I want to know, let's do one thing. I go to 9300 call and I do it. Sorry, keep it. Let me one second. Do it again. What if? Okay, I can reset my values. I'm not changing the IV. I'm making the underline as 9400. Okay. My 9300 call becomes 197. Everyone with me? Now I'm making the date and I'm seeing what will happen to my trade when I take it on 13th May. Okay, I'm taking 13th May morning. Say we are evaluating at 11 p.m. Say 10 a.m. Okay, so what will happen to my position on 13th May at 10 a.m. when the Nifty goes to 9400? My 9300 call is up by 25 rupees against the 76 month which we could have seen on Monday. It is up 25 and the premium is 146. Now if I say instead of 10 a.m. on 13th, it is at 3:15. 3:15 p.m. towards the closing. Okay, 146 premium will become 126 because expiry is just 1 day away. So why will someone have the time element in that option? It will behave more towards the intrinsic. So you see that 9300 call is just 126, which is as on today only. Though the market has moved up 150 points, almost like a 170 points, still we don't end up making. Now let's do the expiry beauty itself. 14th May, that's the expiry day. And look at my option, same market condition at 9400. Let's look what will be my premium at 11 a.m. 11 a.m. My 9300 call has become negative. It is 118 because now I'm on the expiry day. So the intrinsic value is 100 and extrinsic value is 18 rupees. Still, it is having some amount of extrinsic value with it because we are at 11 a.m. Now, if I say from 11 on 14th May, I make it towards 2 p.m. 2 p.m. 9300 call is 103. Can you see? First, it when it was what 9400, but as soon as we hit the expiry day, the option is falling off because here the time is the main killer. So the whatever benefit you were getting of the underlying is completely set off because of the loss which we are making because of the time. So this entire product was with the focus of coming to the intraday thing. When you are a trader, when you are an option trader, for you, every minute matters, every hour matters. So the serious money, you should be coming to know like, how much is my straddle going to move? How much is my straddle going to move? Am I going to make money or no? Now, if instead of 9400, I make it 9500. Definitely at 9500, I'm making money. Right? Your 9300 call will pay up 80 rupees because you are getting more in the money. Understand, your option will become more and more in the money. So at 9500, your 9300 call has a delta which has increased by 0.56 from today. It's 0.99, which is completely in the money. Right? This is how you see. So I take a pause over here. Any question you have for the chain, what if, we can take it up here. For the bank nifty, do we have strike price wise OI built-ups real time? I didn't get you, but everything is strike wise only. So this is, everything is the strike wise only. So can you be more clear? Even if you look at the chain, so chain, you're getting the information strike wise only. So in fact, you can look at, say, if you're doing 2-3 legs, you can see how the entire thing will happen for your 2 options. So you can look at the call and put together, you can look at the different strikes of call together, you can see that which option will have more impact. Now, say for instance, I say the IV has increased by 59%. You can see how the change in IV will impact the premium of all the options. If you want to buy something which is cheaper, so say for instance, I'm bullish, I am buying 9500 call option. My 9500 call option is also getting doubled only. So it is up by 56 points. So I can buy, so that means 107 it will become. Right now it is not 100. Right now your 9500 call option is 51 rupees. If Nifty, if the IV increases by 59%, your 9500 call option will become 107 rupees. entire application, let me be again making clear, application refreshes in every 5 minutes. So say for instance, you are standing at 11:23, the data gets updated at 11:25. So we have 5-minute snapshot data presently. Soon there could be something better off coming up, but presently we have the 5-minute snapshot data. Nifty PCR strike wise, yes, we do have. So when you go to open interest, so someone has asked like to get the strike wise PCR. So when you go to open interest, in your setting, you can see one PCR. So that PCR is basically a strike wise PCR. So as few strikes dominate it, you will always see the ratio coming in this fashion. So I prefer to look at the PCR more in the table view. So PCR, if you look at here, you can get all the strike wise PCR of Nifty. You can change the symbol, make it Bank Nifty. So it is for that particular expiry. Okay. So any more questions from the chain? What if everyone is clear with the chain? So in 5 minutes, your entire analytics is refreshed. Be it Greeks also, everything refreshes. Okay. And this what? Ma'am, I want to know in India if I am shorting straddle and this what, how can be useful. So person who are doing the expiry trading or the thing, for them the chain comes really very handy. So again, I'm taking a quick brief up. I go to what if analysis. Okay. Say for instance, I had shorted 9300 call and say we would have shorted say 9250 call and put at 53 and 74. So which comes to around 127 one thing. Now let's see just in one day how this straddle will be moving up based on your underlying. So say we do the date change. We make it 14th May. First we'll do it from 10 a.m. 90 to 50 call and put would be 70 plus 49, which is 119. So 127 option has become 119. Okay. Now, if you look at, say that the underline will also go higher, underline moves to 9275. When becomes 9275, the 9250 call is 72, put is 48. Okay. So 72 plus 48 is 120. So still it is down. Okay. So even see, whenever a market moves, one of the leg of your straddle will be making money and one will be losing money. So you will come to know at this one go itself, like how the change in market will change your entire premium scenario. Now I make it for the 14th May to evaluate something at 12 p.m. So your 9250 call put is now 60 plus 35, which is nearly 95, 98, right? So it has come down from 119 to 98. So you see that there is a fall in the combined premium from 10 to 12. Now, if I do it for 2 p.m., 9050 call put is 45 plus 20, 65. So even though it is 975, we are seeing it is 65. So you see that you change the market conditions and you can see how the premiums are reflecting. So what if analysis of chain helps you to have the strike wise detail with you, doing the sensitivity analysis when the underlying changes, when the IV changes, when the time changes, how it will impact your premium. And if you are okay with it, if you see that there is a probability of making money, then we should go and buy or sell it. We should see what is the chances of making money, what is the probability of winning, and what is the probability of losing in the entire scenario. So everyone clear with it? Okay. So now, so this was like a trade identification. The one more thing we have here is the trap indicator. So we have gone through the build-ups. We have gone through the open interest. Am I audible? Madhura, can you confirm whether I'm audible or not?
Yes, ma'am, you're audible.
Thank you. So now if you look at, for the trade entry, trade identification, the tools which comes up handy is the build-ups, open interest, chain. Okay. Now chain what if is to be done when you want to find out, like, given my target, what is the price of option it can go, and if I'm okay with that price change in option, then I should go and buy the option. Or given the time in which I'm expecting the underlying to go, will my option make money or no? So you should be very particular in carrying your option for the next day only if you see there is something worth it. Even that should not be a scenario that even your underlying target has come, your option is not making money. So this particular tool of option chain analysis, what if analysis of chain, will help you to identify and pick the trades based on time, also based on implied volatility as well as the underlying. So that's the reason it's very important. Now there is one advanced indicator which has been introduced in the recent releases, that is called the trap indicator. So trap indicator is a pro feature. So basic premise of a trap indicator is it is taking into account the important variables of derivative, which are like open interest, implied volatility, forecasted volatility. Along with it, it is understanding from the data the likely pain area which the options could see. So it's very important that we keep the perspective of implied volatility as well as the open interest, along with it whether there is a probability of writers losing out or no. So first I will show you a chart, then we can go and move. So this is a nifty trap indicator chart. The area with greens are basically that the writers are getting trapped on the long side. So the green is basically the buying thing. You're making money when you're going on the long side in the market, while the area with the red is on the short side. Okay. Guys, just give me a minute. There is some voice issue. Just give me a minute. I will be back in a minute. One sec. So I'm back. Am I audible?
Yes, ma'am.
Yeah. Sorry for the inconvenience. So coming back, so the area with the red shows that it is on the short side. Okay. While the area, the green show that the trade is on the long side. While the area white is basically a no trade zone. Okay. So it clearly demarcates when you should go long market or long in the instrument, when you should go short in the instrument, and when there is a no trade at all. Okay, so clear. So there could be like trade which might be moving only for a day because the things change up the next day. So the signal reverses. So there are few instances where the trade could exist only for a day, but there are few. So the entire gist of this indicator is when you make money, you make a big money. But when the trade is in a sideways, where there is a no trade part of it reverses also fast. So the losses are less while the gains are more. Okay. So this is for the Nifty. So the Nifty, the short signal came basically on the, you had this, the short signal came at 10,900 on 6th March. It got covered on 26th March at 8,630. And post that, we had 1-2 instances where the short came and the entire thing was a no trade one. Similarly, on the long side, the trade came on like 18th March at 15th October at 11,475, which continued for 12,300 on 27th December. So basically, it tells you to roll over the position. If a trade sits and continue to be on the green side, you can roll over the position. Similarly, if it's on the short side, you can roll over on the short side. So now, this was from the chart view. Now coming up to the actual indicator. Okay, we'll go for the bank nifty also. So the first tab of the writing trap indicator, we call it as a WTI, is basically giving you the signals which are coming up instantly. Okay, so the signals which are open are being showed over here. So if you look at yes bank, if you click on any symbol, it opens that chart. So I'll go back. Okay, so the yes bank, the sell signal came on 4th May at 26.75. Presently again it is at 26.65, so it's a marginal one. State Bank, the short came on 4th May at 166. Oh, sorry, I'm reading wrong. The signal price is here and the close means the last closing price of the day. So the signal of the Yes Bank was at 26.65. Currently it is at 26.75. So we are making a marginal loss. The State Bank, the short came at 178.8. It closed yesterday at 166. So we are making 7% trade, 7% return in this trade. IOC, the short came at 75.6, presently at 74.45. So we are making 1.5% gain in that. The new trades which came on 8th May, that's the closing basis, whatever, finally the trades which were on is in Reliance. It came at 1556 long. Axis Bank short 382. Maruti is again short at Oro Pharma long. So let's look at first the chart. So if I look at the Reliance, so this is how the historical data of the Reliance is. Okay, so there will be argument like it did not give a signal from lower and the upper point. Definitely not, because unless until all the parameters fits in, it would trade. So there would be the cases where the consolidation range or where the indicator might not give a trade, but it will pick up the trades when it is completely sure. When you have multiple data of volatility, current, forecasted, open interest, the trap being created, the signal is given with a boost. So like the short, which decisively came in Reliance, 5th March at 1314, got covered nearly at 1,000 rupees. Okay, so you see the track. When you go to the table view, you can see the data, you can see historical. So the last trade it made 19%, then earlier it made 4%. So if you see that the losses are matched to 2 to 3% values, but when the profits are coming, the profit it is riding from 7% also to 19%. Okay, so this way, any trade which you are seeing, you can see the historical date. You can do the from date from say 2016. I'm doing it. All the trades would be plotted up. Okay, you can see the entire structure. So let's see the next one. I go with say Maruti cell. So here is the Maruti cell. So majorly we have seen in this stock right from 17 Jan, it's majorly a short side only. There were places it enters short, it covers up. We see a pullback. There is a no trade thing. Again, it comes down when the data, everything is satisfied. This start giving a sell signal. So we have seen that it came down from 5,500 to 4,600. There wasn't any much trade in that. And then we saw short one. Yes, the prices here are the future price. So there was a query whether it's a spot or future. So entire Quantsapp application is based on the futures prices. We don't have the spot in the application. The question was, can we take a trade based on the using the options? Yes, but the only thing comes up is like how long this trade will last will not come to no immediate basis. So till the time the signals are there, you can materialize on it. But keep a view on the chain motif. So you have to do the sensitivity analysis, like if given like 100 or 200 points thing jump fall coming up in the particular stock, how much will the option price increase? So that particular analysis which has to be done from the user end. So this will give you the signals. So this particularly done best if done in the future, but definitely we can overlay the options into it. If we see that the trade is continuing in the last week, if we see that the trade has come in the last week of the expiry, you can switch over to the next expiry options, because we definitely know that the current expiry will see a lot of theta decay. So that's the reason why you have to manage your trade. Okay. So there are a couple of questions. Let me understand the questions first. I will change input in what we get on the signal comes to exert. Also indicator the signal taker on closing this or based on the intraday. So basically the signals are presently, you can see that whenever there is a 5 minutes change, so the signal will be indicating that during the day itself. So if there is an exit which is coming up and it comes up on the 11 a.m. part of it, it will tell that it will exiting at it. So it will let you know during the day itself, like how the things are changing, because it is reading the prices. Okay. Now if I look at SBI, so if you look at SBI, was a very clean, it's a very clean shot which has been done. So we are seeing that there was a huge short which was there. After few 1 or 2 days, it was on the unwinding side. So there wasn't any trade. And the fresh trade came back in this stock in 4th May at 178.8, and presently it is going on. So if you look at the last histories, so 2nd March trade came, which closed on 28th March, and that made 35% return. Thereafter, the exits happen. So if the trade is not working, it will exit on a very immediate basis. Now, where can you see the trade exit? Is the same page. If the trade is getting exited, it will get exit and it will move to the chart. So if it's not there in the open trade, that means the trade will get into the exit mode. Okay. So the open, all the open signals are seen in the all category. Once the trade gets exited, it moves to your historical one. So when you click on the table view of that chart, you can come to see that. Okay. Soon we will have a few alerts also coming up into it. So that's there in our testing phase. So once that comes into picture, it should go for the live one. But there are few more things which we are working on, and that should be a good introduction add-on to this part. So presently, if you see all the open trades in the all category, if the trade gets closed, you can just have a look on that particular stock chart and see the table view. You'll come to know the stock is the trade is open or it's exited. So very simple algorithm. So it's basically the algorithm developed by Shubham Agarwal. So he's the CEO of the company, and he's a registered research analyst. So you can see the entire disclaimer. So it is being the concept. It's not the developer of this algorithm. It's the trade idea. It's the brainchild of Mr. Shubham Agarwal, and this is his niche trade picking ideas, which he normally does, which has been converted into an algorithm, all foolproof. We have properly backtested it, and we see a lot of value addition which is coming up. So it's basically just a simple chart which helps you to know whether you should go long in it or short in it. So you can have more info of this product also. So you can see the writer's trap indicator is output of a unique proprietary algorithm that detects directional momentum led by option writers losing position by constantly analyzing underlying options, open interest, implied volatility, as well as price. Okay. So any question, anyone here? So I guess so the questions are answered. So it's based on the price, it's based on open interest, it's based on the implied volatility. It has the volatility component, which makes it which is differentiating it from rest of the algorithm. So it is not similar to the triggers one. So that's where people get confused. Is it similar to the triggers? No, it is not similar to triggers. Triggers has its own logic. Here it is sensing out from the entire data of that stock. So it's not just one particular strike, it's sensing out the entire data of that options, data of that stock, is sensing out from the implied volatility, is sensing out from the market driven price momentum, and then combining all the parameters, having the forecasted volatility into picture, it comes out with this signal. Absolutely, we take the trade. So we have our advisory model. So we use the algorithm very diligently. So the trades. So one belief we take it like whatever is developed in the concept application product, we completely assured it is being used by our advisory also. So we are the one who are the first user of this algorithm, because then only the idea starts coming up. So be it optimizer, so optimizer getting the strategy is completely being used day in and day out by our research team for our advisory models. Be the trap indicator, the indicators which we are getting, we use it and we have it. Okay, so definitely there would be some more cutting edge when we are doing our in-house proprietary analysis part of it. We might be combining it with other variables also, but as a standalone product, this is something we are being utilizing it. We have been using it for years now. So the basic signal over here is just long or short. There is nothing called as short covering or long unwinding. So whenever you see a red signal, that means you need to take a short trade. Short means trade in the sense the prices are expected to come down. Whenever you see a green signal, that means you have to take a long trade. That means the prices are expected to go higher. Okay, so there is nothing a concept of long unwinding or short covering. White means neutral. That means it's a no trade zone. So it's basically from the buyer perspective, you need to go and do the buying of the option, because if you start doing the writing, the premiums are limited. So you may not get the exponential return benefit which this product normally has it. Intraday avoid is basically a positional trade. So we do it completely on an intraday basis. So it is not an intraday price data. Once the intraday price thing comes up, then it could be shifted on the intraday. Presently, it is a positional product. So see, basically, it is not that if it was a sell one, and today the price up by is gone up by 1%, and it will start converting. It will give an exit signal. It's just not the one variable of price which is going into it. There could be like variables are implied volatility, open interest, and price, all three summing up together. And it's not the equal weightage part of it. There's a data analysis which goes into machine learning, which goes into it part of it. So even that, so it's not that there's no loss into this indicator. Definitely there is a loss into it, but we exit the trade, what we have seen is the losses are less, the rewards are higher. So it makes it a very favorable reward to this scenario part of it. So you can have the entire trade details. So we have seen there are losses also. Okay, so let's move on. So we have done the trade identification part of it. So we have gone through the build-ups. We have gone to the build-ups. We have gone to the open interest. We have gone to the chain. We have gone to the water analysis. We have seen the trap indicator. Okay. So let me just take a couple of questions what we are having. Future OI and call put OI contradicts. What if the future OI and the call put OI contradicts? So I assume this is from the trade identification of built-up. I would put more stress from the futures and option data on the option data, because option data actually shows you the band, and unless we don't see band shifting, it's very difficult to see the immediate gain. So whenever you see a future OI thing, it doesn't guarantee you that the move will come on an instant basis. There could be a days when like a prices has gone up 0.5% up, OI is up by 1%. It continues for 3 days, and on the 4th day you see that entire burst happens. But in that 3 days, the option would have changed drastically because of the time factor. So out of futures and options, the options would have a more weightage compared to future. Ma'am, whether we have to see the trap indicator and see the built up and what if? See, basically, today we have understood from the standalone basis how we have used it. So all trades needs to be done only from the trap indicator, not necessary. Trap indicator may give you the instant signal of the stock. So if you have some, if you see along with that the future built up, definitely gives you an added one. Otherwise, if you don't doing the trade, that is all. So trap is a standalone indicator altogether which has all the data in itself. Okay, you don't need to combine it with something else to get a higher proof. It has all the data in itself. Now, if the stock is not in the trap one, and if you are seeing the behavior in the market, reading the analysis, doing the market analysis of synopsis, built up, open interest, chain, what if, and coming up with a trade, that is also perfectly fine. Now, someone is asking from the max pain and max gain perspective. I will just quickly take that thing before moving on to the trade management. So see, max pain is basically telling you the point where the buyers are losing the most. Okay, so max pain, the word pain is from the buyer's perspective. Okay, the area where the buyers are losing the most, or the which is creating the max pain for the buyers, is something which is coming up. Have say pain, but believe me, we have started using it, the gain, the max gain, which is the add-on to the max pain. But here it takes into account the price, the premium into account, and it is just not the open interest. Because when a writer writes a position, it is not that all the positions are written at one go. It's not that I have created one position at one time and that's it. There is a writers which manages mind or no. So the gain takes in the open interest as well as the premium. So both of them taken together will give you the point. Okay. So the max gain, the word gain comes from the writer's perspective. Is the point the writers is making the best money. So ideally, the time to look at this product is towards say Wednesday, end of the day, up to 2:30 to the expiry date. It's not the product to be looked out at the start of the expiry, because the build-ups have not been created, and without the build-ups there is no trap also. So without the build-up there is no jitteriness in the writers, so there is no trap also. So that's the reason why the option gain or option pain product we suggest to be looked more on the expiry day and just 1 day prior from say 2 to 30. But the major focus should be on the expiry day. Now, EQ level is something which is very much talked about, and practically it has a lot of benefit into it. So the EQ level indicates if the say underline is below the EQ level, it crosses the EQ level, then the buying thrust can come up. And say if the prices is above the EQ level and it falls below it, then the selling pressure can come up. So the EQ level, say Nifty is below the EQ level, we are at around 9230. If it breaches 9343, then the buying thrust can come up. Okay, this level keeps on changing. Every day, whatever you're looking on the gain thing, keep a focus on the EQ level. And if the EQ level is seen to be going higher, if the prices are breaching the EQ level, then look at the open interest. You will start seeing there is the unwinding coming up. Your rest of the data will also fall in place. So this is what the utility of the EQ level is. Okay. So now let's move on to the architect. Okay. So you have architect. You have architect in the web app also, and as well as in the mobile app. So say for instance, I want to add Nifty. Okay. So I want to do a strategy, say I buy 9250 call, add. Okay. Everybody can see my screen?
Yes, ma'am.
Sure, thanks. So when you add a position, you see that your legs are added on the left hand side and the graph is on the right hand side. Okay. Now you see the one which is yellow mark is the expiry payoff. One which is white dotted lines, it is the PNL as on date. So whatever date I have selected, whatever days I have selected is as on date. So the day 0 means today, there are 5 days left for the expiry, so it's total from the 5 days. Okay, now very important to look at this vertical lines. The yellow is the future price, these are the for the and the are the vision is beyond this future.
Ma'am, the audio is not clear. We can't hear you.
Oh, so sorry. I guess I got into the unmute one. So I will repeat the architect. I guess the architect entirely was not there, right? So let me come back. Okay. So I'm first taking the Nifty. Okay. So if I go to Nifty, I add say 90 to 50 now everyone can listen to me.
Yes, ma'am, it's clear now.
Yeah. So when we add a position, we see the graph on the right hand side and the legs on the left hand side. Along with that, we see the option Greeks, the entire portfolio option Greeks, and the legwise Greek also. Okay. Now, if you look at your yellow line, it's basically the fair price. So what is the fair price? So whenever you deal in a weekly options, we need to understand we don't have any futures. Okay. So 14th May doesn't have a future with it. So we cannot look at the month future while trading the weekly options. We need to look at the weekly synthetic futures. So basically fair price is nothing but the synthetic future. This is nothing but the strike plus the call minus the put. So it gives you much better idea of how the entire option traders are placing the bets, what is the implied future they are looking out for. Okay. So now when I buy a call option, also we see that the one which is yellow dark mark, this is the expiry payoff, while the white ones are the payoff as on date. So it all depends upon what is the day selection. 0 means today, and if I change it to 2, so that means it's for the Monday. Okay, we see as we move around, we see what is the PNL which we are seeing it. So the PNL means the white one, and the yellow one is the expiry one. Now you always see this vertical lines coming up, the blue, green, and the red. So the blue lines are basically the market expected upper and the lower bounds. So those are based on the option data itself, and based on that, this market expected upper and the lower bound is there. So you see that the band upper is 9560, lower is 8939. Thereafter, we see this green band. So green band is basically the standard deviation band based on the implied volatility. So based on the volatility, what the option traders are pricing it is been shown here. So that is right now at 9660 and 8840. So basically it is beyond quite. So people are expecting there could be a volatility coming up in the coming week. So they are placing, the walls have gone high, and so does the standard deviation band. We also have this red one. So if I change the bounds, so you can change here the bounds. If I make it say 8400 lower and make it 10,000 higher and save it. So the upper bound is still higher. So the lower bound is at 8452, while the upper bound is at 10,003. So if I make it say 10,100, definitely we would be able to see here, right? So this basically tells you. So basically, if you are expecting any target in your Nifty, so if you're expecting say 9,500, so 9,500 is well within the market expected range as well as the implied volatility range, your standard deviation range. So that goes in sync with the market. But presently, your 10,000 level is beyond this level. So it has to surpass this and to go for it. So on an immediate basis, we see that 9,500 was the level of open interest also. Is also based on the IV based trend. So it becomes a very important resistance. Now, whenever you're taking a trade, it's very important to do the sensitivity analysis as we said it. So I bought a 9250 call option. Let's do a strategy. So I make a bull call spread. I buy a 9250 call option. I add the position. I say I sell 9350, sell, call, one lot, apply. Okay. So I bought something at 144. I've sold something at nearly 100. So the net we have 44 premium outflow, which comes to around 3345. Okay. So the net debit now we have is of 3345. You have this strategy line. The blue is the expiry payoff. The white is the payoff today. So on expiry, we'll have a profit. We'll have a loss of 3345. It is below 9250. We'll make a gain of 4155. It is about 9350 and above. But now if you look here, on 2 days, that on Monday, if the Nifty comes to say 9500, we'll make a PNL of 2700 versus the expiry, which is 4100. Okay, but there could be possibility that after 9500 it can fall down again. So it's better to square off here and then wait for a lower end. But if the market continues to go higher, then only you make money. So one thing for the strategy is like any directional strategy is that if it gives you a lot of safety. On the downside also, say for instance, my stop loss was 91.50. So at 91.50, I have a loss of 1200 if it comes on Monday, while on the expiry it is 3345. So my downside is also lower, my upside is also lower. So it gives you a safer bet. So you can definitely scale your position. So that's the reason why people prefer to move on to a strategy in a high volatility scenario compared to going to a single leg strategy, right? So now if I change the days from 2 days to 3 days, so that means it becomes like a Tuesday. Tuesday, if the market comes to 9533, our PNL increases 3058 because the selling leg of option will now start losing more. The buying leg will behave like a in the money option. So the fall in time value is not much. We have more component of intrinsic value, while 9350 will have more of time value. So the fall is higher over here. At 9350, we will have the PNL of 1300 on Tuesday, while the expiry payoff would be 4155. If I make it say 4 days, your PNL increases to 1600. Similarly, if we do on the lower end, at 9200, we have a loss of 1400 compared to expiry loss of 3345. So you can also look at your positional deltas, positional Greeks. So your positional Greeks are like delta is 7.71, which means that if there is an underlying moves by 1 rupee, your option will make a profit of 7.71. The theta is minus 57.82. Okay, so that means you will lose out that much amount of money. Your gamma is 0.019, so it will impact the delta in so much quantum. So this way you can look at the position level Greeks and come to know. So you can do, we can do the reset, we can clear this position, and say for instance now if we want to do Bank Nifty. Okay, I add Bank Nifty. So let's do, say for instance we are doing 19500 straddle. So I buy 19500 call, I buy 19500 put, apply. So if you look at the straddle graphs are like a V shape. Okay, so the straddles are the one where if the move comes on an immediate basis, you make fastest money, while if the move comes after some time, you are having a deeper loss. So the straddles should be played when you expect an instant move. Okay, now if we look at basically straddles, triangle are the volatility strategies. So here we have an outflow of 20,000. If I change my IV, if I look at IV goes higher, your profitability shifts higher. So for the 0 day, the profit will increase because you're buying both the option. Walls have a direct impact on the premium, so your premium will increase, so you don't have any loss scenario, right? Similarly, had there been the volatility coming down, our loss would be deeper. So basically, when you do a straddle, strangle, your call on volatility matters a lot. So buying the option at a high vol scenario is quite risky compared to buying the option at the low vol scenario. Correct? Similarly, selling the option at the low vol scenario is very risky compared to selling the option at the high vol scenario. So keeping a close watch on the wall and taking the strategy matters a lot. So this way we have the architect product, which gives you the complete analysis, which helps you to analyze your strategy, analyze your trade with respect to days, IV, and the bounce, underlying moves. So if you have any query on the architect, so most of we have summarized for the today. So we have the trade identifications product. So we have gone through. So we have gone through the build-ups, we have gone through open interest, we have seen the trap indicator. So the build-ups top-down approach, take the sector build-up, look at how the sector is panning out, how the historical build-ups of that sector has been, whether it was more on the long side, more on the short side, what it was. Then you can go to the script-wise build-ups where you can see how the individual script in that sector is behaving in the cycle, in the OIH also. Come up with like a trades. Take a trade where you see the build-up is on the long side for going long and on the short side for going short. So like a short covering is a short-term thing. Unless there has been a huge short seen and then you start seeing the short covering, then we can take a long position for some time, for some move. But if the shorts were not seen aggressively, then avoid taking a long position for a short covering trade. Combining the built-up thing then with the open interest, once you boil down with the particular stock, go to that stock's open interest, see how the bands are seen, whether you are seeing any in the money writing happening, whether you are seeing the change in open interest, how is it spanning out after, like for any custom time period, has the change impacted significantly or no? If you see a significant shift, consider that as your new band. So the open interest gives you that particular idea, selecting the band. So if you are seeing a long built up and along with that you are seeing in the open interest there's an unwinding on the call side. So that means the call writers are unwinding the position. Then it's a trade to go long in the option because now the writers, the call writers are seeing the panic and there is an upward thrust which is coming up. Then Synopsis is a product. Basically, it's more an intraday one. So someone who wants to do a quick 10-15 minutes thing, then can look at the Synopsis at around 9:30, 9:45. See which are the strikes, which are the stocks which are showing the momentum. So if I look here, one sec. So if you look at Synopsis, the first one, future OI, there is a heat map over here which tells you at one go whether the market is more of green or more of red. So if you look here, see this one, the greens are seen. Then if you go to the future OI, you can see the options where there's a long call is seen, long put is seen. Similarly, we can see where there's a short call or a short put. So we saw that Reliance had a more of short put, HDFC Life short put was there. Then short covering plays an important role in option. So the short covering of the call is very good. So if we see that there's an unwinding happening on the call side, that means the writers are getting panicky. We saw in Dr. ID happening the same, Kotak Bank, Lever, Hindustan Unilever. Then on the put side, we saw the pessimism coming up in the HDFC, M&M, Bandhan Bank. So this way, the Synopsis is for your fast trade execution point of view. Trap indicator we saw. So I guess so. Someone had asked me to look at the Bank Nifty. Let me just look at the Bank Nifty. Give me a second. Okay. So now when we go to the trap indicator, yes. So here is the trap indicator again. I go to the chart view. I see Bank Nifty. Okay. So look at Bank Nifty. There was a good short trade coming up in the March. That again in April there was a V-shaped thing. So it was basically not much a signal. So April, it was a 2% move. March, it was a 33%. Then in April, there was like in a 1 day, the trades were getting closed. So there were scenarios wherein there was a 1 day move. So here we saw 29th April. Right now, it is in a no trade one. Okay. So the trap indicator is basically our proprietary indicator developed by the CEO, Mr. Shubham Agarwal. So based on his research analysis, so it's a combined inputs taken from the volatility, open interest, and the price move, along with the point where the writers could see the probable traps creating. So it's a plain indicator wherein it's to the red indicates you should go for the short side, and the green indicates you should go for the long side. Once you have picked up the trade, you can do the what if analysis from the chain and see how it will impact you. So the chain what if analysis will help you to know, like, what if the vol increase, how will it impact the entire premium across the call and put, how the deltas will change. So the deltas will not remain the same, it will also change. How will the premiums change? So everything coming into picture is what the entire option chain what if analysis is. So that's it for today. If you have any questions, we can take it up. Just a second. So what if has two features. It has based on the days also, and as per the intraday time also. So when you do days, that means it is picking up one calendar days and doing the thing, which is a normal case if we take any option calculator. So the logic is you're taking the days into perspective. When you are want to go precisely into the time factor, you can go into the time, which is the date, and you can select any particular time, any particular date for that expiry, and you will see how will the premium be there for that particular time. So it's more useful. The time factor comes into picture closer to the expiry. So if you are aggressive trader, if you take a lot of positions, I would recommend to look at from the time perspective, date wise also. And if you are at the start of expiry, building up the position 2-3 days thing, then you can look at it for the days perspective also. So backtesting intraday strategy, presently we don't have it. So once we have the intraday data, we will get that also in the backtesting. But presently the backtesting only on the EOD data. The cumulative OI data in your app sometimes doesn't match with the NSE. Frankly, we don't watch the NSE website. We are the registered vendor of the NSE, so we get the data directly from the NSE thing. So website might have a bit delay part of it, we don't know, but all our data is authentic from the exchange. So the cumulative OI will always be matching with the BHAU copy. Anytime you can cross verify, you will always see it is the same. We don't match it with the NSE website because NSE website has their own lagging thing. So we are taking the data which is sent by the exchange to us. We are the registered vendor for that. I'll take a bit on the option triggers. Okay. So option triggers is basically completely an open interest based product part of it. So when you look at the triggers, you see which is the highest strike call and highest strike put. And basically, if you start seeing that there is a unwinding, the strikes, look at the stocks which are coming closer to the strikes of call, then we can look out there. So basically here you have this call difference, put difference. So this means that how far is the strike from the underlying. So the call difference, ACC, if I look at, is 1138. Highest strike call is at 1300. That means highest strike call is 14% away from the current market price. So why will a writer panic in that case? Similarly, on the put side, it is at 1,000 the put, and it is 12% away. So probability is towards the option which is closer to, which is seeing less of the call difference and the put difference. So say for instance, if I look at Adani quotes, it's 1.75% away. So we are trading at 285, 290 is the highest strike call. And we saw that there's a OY change which is negative. So that means the writer of that 290 call has started showing some jitteriness. They started showing some fear. So that could be a good trade for going long in the options. Similarly, if you look at, so you can filter the thing. So I say filter it according to the call difference. You have SDFC Life. So when you click on you can open into open interest or option chain. So if I open it into option open interest, so this is SDFC's call put distribution. We see that the change in OI, so it is closer, it is moving from the highest strike call. There's an upward shift in the call strike. There's a writing happening on the put side. So overall, the data is showing a positivity in this stock. Dr. Reddy. So Dr. Reddy is closer to the highest strike. So let's see how it behaved. So it is closer to the 4,000 call. The 4,000 call saw the shedding yesterday. So that showed that the writers of the 4,000 call were feeling some jittery. Okay, so the triggers positions helps you to find out the trade where there could be a very quick move coming up in the option because of the writers getting the entire fearful. So that is the entire one. You can do it for the call difference, put difference, and pick up the stocks which are closer to the, which are having the least difference. Okay, so like on the short side, Jindal Steel 90 is the highest put, underlying closed at 89, and the put saw the shedding of 2%. So that is showing the pessimism from the put writer's perspective that can again put a pressure on the downside. So look here, this was the highest put. The put saw the unwinding. We saw call writers coming into place, which is again a negative sign. So it's a downward shift, overall showing a negative structure. So this way, triggers helps you to take the trade. So in Synopsis option, we have index options also. So at times you will see when the index activity, you will see the index options also, it's just not the stock options. In FNO volume, we have the most traded futures, most traded index call option, index put option. So you can refer this also. Okay. So gain, again, someone has asked me, so just repeating it. So the gain is basically a writer's product. It will tell you the point where the writers will tend to make the max amount of money. So ideally do it only for the Nifty and Bank Nifty. Don't go in for the stocks. So this product is basically from the index perspective, though we have it for the stocks also, someone won't go in it, but we don't recommend it. Indices, look at the gain level, look at the EQ level, which is more handful, so it's more worthy. So it basically needs to be done on the expiry date. So if you see the EQ gain level at 9,300, that means the writers are expecting the range of 9,300. So we try to position the trade near it. So if you see the gain level is shifting, that means today is the day for the buyers and not for the writers. In short, EQ level, if the price is below the EQ level and the price starts moving above the EQ level, that means there could be a call writer's trap. Similarly, if the prices is above the EQ level and it breaches and goes below it, that means the put writers are on the trap. So the EQ level is quite handy. That could be watched on a daily basis. Gain level only meant for the expiry. Presently in the backtesting, we don't have a calendar strategy backtesting. So we will have the further algorithms built up in the backtesting, which will give a lot of flexibility. So as of now, the expiry is the same. So once that's there in our development list, definitely will come out to the calendar strategy backtesting very soon. But presently, I would say it is a similar expiry only. Okay, so we can call off for the day, and if you have any queries still left, you can write to us at support@quantsapp.com. My team would be there to assist you if there is anything serious. They can get it clarified from the management team, and we will be there to help you. So also, I will let you know that we do have a support case raising mechanism in the application. So if you go in the more, and if you go on the help, you can raise a new query. So instant basis, if you have any query for app, advisory work, sales, whatever, you can click it, attach some image, whatever screenshots you have taken, and then you can do it. So the support team is quite active, so they would definitely be there to address any of your queries, whichever you have at any given point of time. One more important thing is the entire Quantsapp application is deep link. That means you can share your any strategy with any of your friend with the same indicators, with the same setting. So say for instance, I'm doing open interest, I'm doing Nifty, change in, if I want to do the time wise, I want to show to my friend that on 8th May from 2:15 p.m. there was a significant change in the entire OI thing. I'll just do the triple dots. So in Android also we'll have the share option. So this is the iOS one, but entire functionality remains same both on iOS as well as the Android. We have the share options everywhere, deep link one. You can share it. Right now in my iPad, I don't have the WhatsApp thing. So it will show the WhatsApp, Twitter, Gmail, Hangout, whatever it is, LinkedIn, and you can share it with your friends and you'll get the complete detail. Okay, so friends, use it, explore it, because it's meant completely from the option traders perspective, as we are a hardcore derivative trader. So our team is completely focused into derivatives, futures and option trading. So if you have any suggestion, do write to us at support@quantsapp.com. Any query anywhere, please let us know. We would be there to help you out. Thank you so much.
Thank you, ma'am, for the webinar.
Thanks, Mathura.
Ma'am, also there have been a lot of queries regarding whether the recording for the same will be made available.
Yeah, we will be having this recording within a week. So you can announce this recording within a week.
Okay, so we will be making the recording available in the application within the week. Okay.